It's a Tuesday, not a special one. The kind of Tuesday that exists purely as filler, a gray placeholder between Monday's regret and Wednesday's indifference. You're on the 8:12 train out of Hoboken, standing because the seats are gone, holding a $6.75 coffee you justified because you skipped breakfast. Outside the window, New Jersey dissolves into the tunnel, and then there's nothing but black in your own face staring back at you in the glass. You look tired. You look like someone doing math in their head, because you are. Your checking account has $1,247 in it. Rent is $1,850, due in 9 days. Your credit card, the one you are going to pay off this month, same as last month, same as the month before, sits at $4,300. Minimum payment, $87. You've been paying the minimum for 14 months. You don't want to know how much of that is interest. You know anyway. It's most of it. The train rocks, you grip the overhead bar. The man next to you is reading the journal on an actual physical newspaper, the kind of flex only certain men over 50 can pull off without irony. His watch catches the light when he turns the page. You're not a watch person, but you notice. You always notice now. The office is an open floor plan in Midtown that smells like ambition and microwave salmon. You sit down at 9:04, 4 minutes late, and nobody cares. That's the thing about working in finance-adjacent tech. Everyone is simultaneously too busy and not busy enough. There's always a Slack message, there's never quite enough money. Your base is $74,000. In any other city, you'd be fine. In New York, $74,000 is a number that sounds impressive at your cousin's wedding in Ohio and means almost nothing by the third week of the month. After taxes, after the commuter rail pass, after the $1,850 rent on a studio where the oven and the bed are in the same room, you have about $800 left to live on each month. $800 for food, for clothes, for the gym you keep paying for and haven't entered since October, for life. Your coworker, Devin, drops into the chair beside you at 9:15. He's 26, same as you. Same job title. He just got back from a long weekend in Miami, and he has that particular tan that comes from doing nothing responsible for 4 consecutive days. How was it, you ask? Unreal, he says. Stayed at the Seitai. Have you been? You have not been. How, you ask, because you're still the kind of person who asks. He shrugs. Points, he says. Then he pivots to his monitor like the conversation has concluded. You sit there for a moment, just a moment, then you open a new tab. You find the subreddit at 11:30 a.m. on that same forgettable Tuesday. You've been there before, r/personal finance, r/investing, the usual responsible corners of the internet where people talk about Roth IRAs and index funds and living below your means. Usually it makes you feel virtuous for 20 minutes and then vaguely hopeless for the rest of the day. But today, you fall down a different rabbit hole, a thread titled From 8K to 94K in 11 Months. Not crypto, options. You read every word. The guy, username 3 commas or death, lays it out methodically. He's not selling anything, he's not asking for followers. He posts his brokerage statements, date stamped, position by position. He made 12 trades, 9 were profitable, 1 was a loss that would have ended most people. He held through it. 2 weeks later, it reversed. $8,000 to $94,000. You read it again. That's a down payment. That's breathing room. That's getting out. You spend the rest of the afternoon reading. You miss a 1 o'clock stand-up. You tell yourself you'll catch up. That night, in your studio where the oven and the bed are in the same room, you open a brokerage account. Robinhood first, then Webull when someone on the thread says Robinhood is for beginners. You transfer $2,000 from savings, the $2,000 you were not supposed to touch, the $2,000 your mother helped you build after the last rough year, and specifically said, her exact words, "Do not touch this unless you're bleeding." You are not bleeding. You tell yourself you are not bleeding. You buy 2 call options on a semiconductor company whose earnings are next Thursday. Each contract costs $340. You buy 5. Total outlay, $1,700. Then you sit back and look at the screen. This is how it starts, you think. You have no idea. Thursday comes. Earnings drop at 4:02 p.m. The stock pops 11% in after hours. You refresh your Webull app every 45 seconds for 2 hours straight, standing in your kitchen eating crackers because you forgot to cook. By Friday morning, your $1,700 is worth $6,240. You read that number 4 times. $6,240. You screenshot it. You don't send it to anyone because you're not that person yet. But you look at the screenshot 6 more times throughout the day. On the train, in the bathroom, during a meeting where your manager is talking about quarterly targets and you are somewhere else entirely. You made $4,540 in 48 hours. That's 2 months of rent, you think, from a laptop in my pajamas. Devin with his Seitai Hotel doesn't know about this. The guy with the Wall Street Journal and the watch doesn't know about this. Nobody in this train car pressing themselves against strangers on a Friday morning knows what just happened to you. You know. You feel it in your chest. Not quite joy. Bigger than that. It's the feeling of having found a door in a wall where you were certain there were no doors. It's the feeling of having cheated something vast and impersonal. The market, the city, the whole grinding machine that takes your $74,000 and turns it into $800 of breathing room a month. I figured it out, you think. There it is, that sentence, the most expensive sentence in the English language.
You take $3,000 of the profit and roll it into the next trade, a biotech company with a drug trial results due in 2 weeks. Everyone on the thread is talking about it. The upside, they say, is enormous. You buy 15 contracts at $180 each, $2,700. You keep $1,540 in cash, a responsible gesture. You feel mature for doing it. The trial results come on a Wednesday. The drug misses its primary endpoint. You don't fully understand what that means until the stock drops 34% in 4 minutes. You watch it happen in real time. Your $2,700 becomes $390 before you can decide anything. By the time you tap sell, you get $340. You lost $2,360 in 1 morning. You sit very still for a long time. Okay, you think, that's what a loss feels like. But here's the thing, you're still up overall. You had $1,700 turn into $6,240. You lost $2,360. Net, you're still ahead by nearly $2,200. You're a profitable trader. This is just variance. This is just the learning curve. Every trader has losses. 3 commas or death had a loss. He held through it. 2 weeks later, it reversed. You open the app again. The next 2 months are a film edited for maximum emotional damage. You make $1,100 on an energy trade in week 3. You feel like yourself again. You make $2,800 on a tech earnings play in month 2, and you actually call Devin to tell him, and the sound of his surprise is worth almost as much as the money. You're trading options, he says. Learning, you say, which is true in the way that falling is technically a form of learning to land. But the losses come too, and they're different from the wins in one crucial way. They compound, not mathematically, emotionally. Each loss makes you need the next win more urgently. Each urgent trade is a slightly worse trade. You start sizing up, putting in more per trade because you know this one is the one, because you've done the research, because the chart looks exactly like the chart 3 commas or death posted in Exhibit 4 of his thread. By the end of month 2, you have $4,100 in your brokerage account. You started with $2,000. You're up $2,100 in 60 days, still winning. You tell yourself this every night, still winning. The tax forms arrive in January. You've never received a 1099-B before. It's a new document in your life. the way a speeding ticket is new the first time, carrying that particular bureaucratic weight of something you did has been officially recorded. You take it to a tax preparer on 34th Street because the forms look complicated and you don't want to mess it up. His name is Gerald. Gerald has the patient, slightly exhausted energy of a man who has seen many people make your specific face when looking at this specific document. Gerald types. Gerald pauses. "You traded quite a bit," he says. Not accusatory, observational, like a doctor reading a chart. "A little bit," you say. He turns the monitor to face you. "Your total gains for the year are $14,300. Your total losses are $11,900. Net gain, $2,400. "Okay, so you say, I owe tax on $2,400. That's manageable." Gerald shakes his head, not unkindly, like someone who's about to show a child how gravity works. "That's not how it works," he says. "Short-term gains, anything held under a year, are taxed as ordinary income. Your gains are taxed at your marginal rate. Your losses can offset gains, but you had more gains earlier in the year before the losses hit." He typed something. "You also have a wash sale issue on 3 positions." "A what?" you ask. "You sold a position at a loss and rebought the same stock within 30 days. Those losses are disallowed." The number on the screen says $3,400. You owe $3,400. You have $4,100 in your brokerage account. After taxes, after you extract what you owe, you'll have $700 left. You started with $2,000. You say, "I don't understand." Gerald says, "You made $2,400 net, but tax law doesn't recognize it the way a simple spreadsheet does. You had short-term gains taxed at 28%. Your disallowed losses can't all be applied this year." He pauses. "You would have needed to clear about $9,000 in net profits just to come out even after taxes, given how the gains and losses were timed." You sit with that for a moment. $9,000 to come out even. You made $2,400. You owe $3,400. You say, "So I lost money, even though I made money." Gerald folds his hands. "Welcome to active trading," he says. On the train home, the 6:44, not the 8:12, because you stayed late to stare at nothing, you hold the strap and look at your face in the dark window again. Same face, more tired. You think about the $1,850 rent. You think about the $4,300 credit card that during the months you were trading, you'd been paying only the minimum on, even during the winning months, because the winning months felt like momentum, and you didn't want to interrupt momentum with something as boring as debt repayment. At 22% APR over 14 months on a $4,300 balance, paying minimums, you've paid approximately $1,100 in interest. You have made roughly $0 this year, net of taxes and interest. You pull out your phone. You open Webull. You look at the positions you still have open, 2 of them, small, speculative, the kind you told yourself were just for learning. They're both down. You close the app. You open the calculator instead. If you had taken the original $2,000 and paid down the credit card, and then taken every dollar you spent on trading, the $87 minimum you paid instead of more, the hours, the emotional overhead, and instead automated $200 a month into a plain index fund, 12 months, S&P returned about 24% this year. You would have a credit card mostly paid off, $2,400 in an index fund, and approximately $1,000 in less stress-related minor expenses. Coffee, the late-night food delivery when you couldn't focus, the second Webull account you opened when you wanted to paper trade separately. You would be ahead by nearly $4,000. Instead, you are at 0. The train surfaces from the tunnel into the open air above Secaucus. The skyline sits there, brilliant and indifferent, lit from within by 10,000 floors of people also doing math, also looking for the door. You think about Devin and his points and his Miami tan. You wonder for the first time if Devin actually has money, or if Devin is just very good at performing money. You wonder how many people on this train are performing. You wonder how long you've been performing. The $6.75 coffee this morning, the Weeble screenshots you look at when no one is watching, the way you said learning instead of losing when Devin asked. The train pulls into the station. You don't check the app again. You walk home in the dark, and you do not walk fast this time. There's nowhere to be. There's no momentum to protect. There's just the cold and the math and the uncomfortable, clarifying weight of understanding exactly where you are. It's a Tuesday. You know what you have, you know what you owe. For the first time in months, those two numbers feel like something you can actually work with.